Hello traders and welcome back to my YouTube channel. My name's Antonio. Most of you might know me on Instagram as Ants Analysis. And in today's video, I'm going to show you exactly how I passed a 100k FTMO account in just one trade. Before we jump into the video, make sure you hit that subscribe button so you don't miss any more content. And if you want to join my VIP trading group, where I go live over 3 times a week and send in daily trade ideas, just click the link in the description below. But for now, let's jump straight into the video. Right guys, so the trade that was taken was on Euro JPY. It was a buy position. I'm going to tell you why I took the buy position, break down my confluences for the trade, and essentially tell you how I got in and how I exited and where I put my stop loss and stuff like that. So first thing to notice, we're on the 1 hour time frame here. It's clear to see that price is bullish, right? We're in an uptrending market. Price is forming higher highs followed by higher lows. We can visually represent that by drawing in something like this. Now, what's key to note here is that we have technically broken out of this ascending trend line, and also it seems like we have also broken market structure. Okay, price has formed a new lower low in the market. So with me saying this, most of you might be thinking, okay, well, if he's explaining this, why did he take a buy position? And that will become apparent when we drop down to the lower time frames. First thing to note is that price does like to make false breakouts, especially when we're uptrending. Price will make false breakouts to the downside, grabbing liquidity before we make that move back to the upside. There's many examples where this has happened before. As you can see here, price formed this low point within the market support level, price dipped below it, grabbed liquidity, and then pushed to the upside. Now, the way that we can tell whether price is actually breaking out or if it's faking out, there's a way we can do it. And the way we do that is by jumping down to the lower time frames and seeing the way price pulls back. Okay, so let me drop down to the lower time frames, such as the 15-minute time frame. In this example, actually, we're going to use the 5-minute time frame. So here we are on the 5-minute time frame, and this move that we had here is technically the breakout. Okay, that is what sellers would be seeing as the breakout to the downside. So sellers have seen that and they're now looking for their sell positions, and most people who are trading this for a sell position would be looking for price to make this pullback, to retest previous levels of support as a resistance, and then look for that sell to the downside. Okay, which is completely fine. However, notice the way that we have pulled back. The way we've pulled back is very impulsive in itself, which is telling me that a lot of buyers have stepped in from the market down here, which leads me to believe that it was just a liquidity grab for buyers to step in higher. Okay, strong impulse move back up. After I see an impulse to the downside or to the upside, if I'm looking for this sell position, I will need to see price correct to the upside. Okay, not impulsively move to the upside, correct to the upside. Because what a correction tells me is that buyers are not active within the market. Okay, when buyers are not active, it leads sellers to gain control of the market after the pullback. But this one in particular is impulsive. So that is the reason why I was aware that rather than this being a breakout, this was just a fake out for liquidity to be grabbed and price to move to the upside. Now, let's just say that, for example, let me skip it a little bit. Let's just say that sellers have jumped in on this market. Let's say you're someone who's watching this video who would actually take a sell position at this level. Okay, you take a sell position and you're targeting, let's say, all the way down here. You take a sell position, you get an entry, and fair enough, price is moving in your favor. Let's just continue with price action now. What can we notice now? Well, we can notice that price is now correcting to the downside. So rather than continuing to the downside, which obviously as a seller you would want to see, we are now seeing sellers take a break from the market. Okay, and rather than being an impulse to the downside, correction to the upside, and continuation to the downside, this is now switched where buyers have clearly impulsed to the upside, and we're seeing a bearish correction, which is just building up liquidity for a buy move. And that's exactly what I saw. So I saw that sellers who are entering this market should not be in this market. And I took advantage of that by allowing this correction to form and taking a buy position soon, which I'll show you. However, if you were a seller in this market and you took a sell position from this high point here, you should be actively watching your trades to see how price moves whilst you're in it. Because for example, if you took a sell position here and you just set and forget it, didn't kind of manage your trade whilst you was in it, you wouldn't have been aware that price was moving in this correction to then exit your position. Okay, you do not want to be in a trade if price is just correcting to the downside. You'd want to get out of that in profit, call yourself lucky, and then look to take buy positions. Anyway, let's continue this, see what happens next. Exactly that. So I took my buy position at the bottom of this correction and I targeted this high point here. So my position looked something like this. My stops just below the low point, and it was a 1 to 10 passing an FTMO account. Got quite a good entry down here. Stops below the low, and then targeting this high point, which was enable me to make 10% on my 100k FTMO account and pass a challenge in just one trade. This was also sent into my VIP group, which I will plug into this video as well. Many of my members took it too. But yeah, the reason for targeting this high point here as well is because it's a strong level of resistance where clearly sellers have stepped into the market. And if I play it a little bit more, we can actually start to see that this level was being used as a resistance. So we done well to get out of the market. It's a sensible, not overextended, not greedy target to have. It's a realistic target with a great risk to reward trade. So anyway, guys, yeah, that's how I took a trade on Euro JPY, which helped me pass an FTMO account. Really simple stuff, just being aware of who's in control of the market, who's currently impulsive, who's in control, where's the momentum, where are the corrections happening to what side. You know, strong impulse to the upside followed by a bearish correction would normally, you know, higher probability lead to a bullish continuation, which is why we took the buy position. And also, I hope you took away that if you were someone who would take a sell from this, you know, it's not a bad thing necessarily. I understand why people do take this, but just be aware when you enter the trade, manage the trade, see how it continues to move to the downside. And if it is in a correction, just be cautious that, you know, this continuation is possible, and consider, you know, trailing your stop loss to break even or closing out. But anyway, guys, that is the end of the video. We will now go into the outro. Thanks for watching this video, guys. If you liked it, be sure to leave a like and a comment. Let me know your thoughts in the comment section below. And if you haven't already hit that subscribe button, make sure you do it so you don't miss any more content. Have a great rest of your week, and I'll see you in the next video.